Gold price slips as oil jumps again. US-UK split from Eurozone over the inflation thing. Gold prices edged lower on Monday while US oil prices rose to 7-year highs. Bond market traders said they expect Fed tapering to begin next month, and a Bank of England policymaker warned of a significantly earlier rate rise in the UK, writes Atsuko Whitehouse at BullionVault. Spot gold prices slipped 0.1% to $1,754 per ounce after cutting Friday's 0.9% spike following mixed employment data, with the U.S. economy creating jobs much slower than expected in September, but the unemployment rate dropped to an 18-month low and wages accelerated. This should be more than sufficient to keep tapering on schedule for the November announcement, Ian Lingen, BMO's head of U.S. rates, said in a note, pointing to the wage increase. Gold prices for UK investors meanwhile dropped 0.4% to £1,286 per ounce as sterling strengthened against the dollar on the FX market after a Bank of England policymaker said he wants to start raising borrowing costs sooner. I think it is appropriate that the markets have moved to pricing a significantly earlier path of tightening than they did previously, said Michael Saunders, one of only 2 policymakers who voted last month to end the BOE's bond buying program immediately, on Saturday. With inflation running well above the UK Central Bank's 2.0% target, we are going to have a very delicate and challenging job on our hands, Governor Andrew Bailey told the Yorkshire Post newspaper. We have got to in a sense prevent the thing becoming permanently embedded because that would obviously be very damaging. The UK's Consumer Prices Index surged by 3.2% in the 12 months to August, with the pace of inflation showing its largest ever month-on-month increase on the current CPI data beginning January 1997. Data for September are due next Wednesday. European gold prices meantime edged lower by 0.1% to €1,518 per ounce Monday as the single currency continued to hold 15-month lows against the dollar after European Central Bank President Christine Lagarde reiterated her call against overreacting to what she calls a largely temporary rise in inflation in an interview with Der Spiegel. Consumer price inflation in the 19 countries sharing the euro accelerated to 3.4% year-on-year in September, a 13-year high. Oil prices rose further on Monday, extending multi-week gains, as Brent crude was up 2% at $84 per barrel, the highest level since October 2018, while U.S. oil rose 2.5% at $81.30, the highest since late 2014. Spot silver held 0.5% down at $22.56, giving back last week's gain. The price of platinum, which finds 2/3 of its demand from industrial uses, led by auto catalysts but also including hydrogen fuel cells, held at $1,029 per ounce, the highest level since early August. Platinum ended Friday with its best weekly gain since late June, by increasing 5.1% in US dollar terms. US bond markets and most banks are closed for Columbus Day, although the New York Stock Exchange and the Nasdaq will both open.